putting my investor cap on, we 3.5 years into being in Puerto Rico a year and a half ago, go to some of these banks and say, look at this. We've got cash flow. We've got some properties that we value add on. So there's tons and tons of equity. Lend us something. You appraise it. Lend us 50%. And I tried. I beat my head against that wall for a year.
Yeah.
Couldn't get it done. Everybody, welcome back to the channel. Today, it's my pleasure to introduce Nate Whigham. He just helped us to close really the first debt that I've done on the island, and maybe some of the first debt that's come to the island since Maria. So we're gonna have a conversation about the history of that. Nate's gonna introduce himself a little bit, tell you his origin story and how he came from California to Puerto Rico. This is a theme that we've got going on. I'm gonna eventually do a video on why everybody should leave California and come to Puerto Rico, but Nate's gonna try and convince you of that right now. So say
Great.
hi.
Yeah, hi everyone. I'm Nate Whigham. My company is Ian Capital, and I'm a commercial real estate capital advisor, which is a real fancy way of saying I'm like a commercial mortgage broker. So I help people structure and capitalize their deals, whether that's debt, equity. We look at all property types, all parts of the capital stack, all over the country. And as Robert mentioned, I moved here from LA just over, I think it was 3 years last month. The reason I got here, randomly I heard, I think it was Peter Schiff.
In Puerto Rico and the other islands, they're not subject to the U.S. income tax.
On a podcast like maybe 5 years ago, talking about the tax structure here. My initial reaction was I totally dismissed it. I was like, 4%, no way, you guys are all going to prison.
He's full of it.
Can't be real. No, not even possible.
Right.
And I didn't think about it for a year, because about a year later, my sister got married in Jamaica. And so my wife and I went to the wedding, and when we finished, we wanted to keep traveling in the Caribbean. So we fly to Miami, we're like looking at the board, next flight, San Juan, why not? And we just got on a plane, came here with no expectations, spent about a week here, had a great time. And while I'm here, I'm at the bar, the hotel, drinking, I'm talking to people like, hey, is this tax stuff,
real?
it's not real, right? And everyone's like, oh yeah, it's like super real.
Yeah.
And I'm like, really? So I started doing my homework, and of course it's very real once I really got my head around that. And I'm sitting in LA paying federal tax, California tax, LA city tax, and I'm doing the math, like, what am I doing here? So you're saying I could
literally save 50% of your money in taxes.
I'm like, so wait, so I have to move to a tropical paradise that's a US territory, and I pay this, and now I pay this, and it's all legal.
Yep.
And it was a total no-brainer. So I was like, okay, told my wife we're moving, and we closed some deals. Probably a year later, we were here on the island.
Well, and we're glad you came, because there is such a need for this debt stuff to show up. You're one of the first people to start to think about that. I think you've got a big first mover advantage in this space, and we're glad to be in business with you, and hope that we can, and we're going to talk about later on in this short video what we're planning to do shortly with some debt stuff. But we are also wanting to talk about the history of debt and the history of liquidity in Puerto Rico. So you've got the stats and you've got the knowledge. You want to just drop it on us, please?
Yeah, absolutely. So anyone here today trying to do deals will know that getting any kind of credit, whether that's acquisition financing, bridge debt, construction financing, is a very difficult process. And what's really interesting about that is that wasn't always the case. Puerto Rico actually used to be kind of like a banking hub. In the early 2000s, there was something like 15 banks that were here on the island, and not only we're here, we're active in the US. In fact, I've been doing what I do since 2006, and I remember going to New York and pitching construction loans to Doral Bank's office there around that time. Doral was one of the legacy Puerto Rican banks. So the island had a history of really having a lot of depth of credit services here, but a couple things happened. Well, I'd say three kind of key things happened. One is, as we all kind of know, in the early 2000s, when the 936 tax incentive went away, that really is what pushed Puerto Rico into what became a 12-year depression.
Yep.
And then in the midst of that depression, the rest of the world goes into the global financial crisis. And a whole bunch of banks in the US failed as a result of that. Same thing happened here.
Doral was probably the biggest.
Well, Doral came later. That was a different thing.
Was it?
Western Bank, I believe, was a victim of the financial crisis, and there was a few others. But Puerto Rico then, like in the mid 2010s, had another kind of banking crisis, and that's when Doral blew up.
Okay.
And so you had these kind of three things happening that just really were just popping banks left and right over that time period here. And in fact, I think when I got to the island in 2019, there's 5 banks, 6 if you include Banesco, but they were doing very little at the time. But about a year after I got here, Santander and Scotiabank exited.
Both went away.
And so effectively, there was 3 banks here. Again, you say 4, Banesco's doing a bit. When we go back to the same timeline in the U.S., right? 2000s, U.S. goes into the global financial crisis. Banks blow up. The banks that survive start really contracting their credit.
Right.
Like trying to get a construction loan from a bank for great projects from 2009 to about 2012, 2013 was virtually impossible.
I completely remember those days.
Right.
It's like I can remember thinking the bank's business model is broken. They lent me all the money in the world when we were at the top of the market, and they won't lend a dollar when we're at the bottom of the market. Go figure.
No.
The life of a banker.
So in the mainland, when that occurred, when the market was recovering, but the banks still were being too conservative, and part of it was there just PTSD from the financial crisis. Part of it was regulatory. Basel III was put into place. There was this thing called HVCRE requirements on banks, which are high volatility commercial real estate loans, which really limited construction financing specifically around what banks could do. So it just made it tougher. So a lot of them just weren't doing it. But at the same time, the private credit market in the mainland really expanded dramatically to fill that void. So I think the private credit market in the kind of mid 2000s of total commercial credit in the mainland was about 1/3. Today it's grown to be closer to 50% of all activity in the market.
Wow.
As a percent of total share.
Right.
And the actual amount of growth in the private credit market in the mainland it's gone up about 200%. And so, and you know that, right? If you're doing a deal in the mainland, if you bring me any kind of transitional deal, whether that's a construction loan, bridge loan, or maybe a fix and flip loan for something in Florida or California, in each of those states, I have 100 lenders.
Yeah.
I can take it.
And that was relatively new, right? Like.
Well, this is all what developed
Yeah.
During that time period because there's demand in the marketplace. There's a gap that the conventional banks weren't filling, and the market basically, the private credit market expanded to fill that gap.
Yeah.
Right. That never happened here in Puerto Rico because the U.S. had a financial crisis, then it had time to recover, and that private credit market developed. Here it was depression, financial crisis, other banking crisis, right? Oh, and also a giant hurricane.
Yeah.
So it just never.
And then earthquakes and a big flu.
All these things, right?
Yeah.
So the private credit market here never filled that void, and the overall commercial credit market, which includes bank debt, in the mid 2000s here was around $30 billion a year, and GDP, let's say 2006-ish, is roughly what it was here in like 2019. So 30 billion then. Today, or about 2019, the private credit or the total commercial credit market here, which is mostly banks, is less than $15 billion.
So half.
So half. So if you think about it, Puerto Rico goes into depression, GDP contracts pretty dramatically over many years, comes back and recovers to the same levels when it started, but your entire commercial credit market is half of what it was.
Right.
And there's virtually no private credit. I think then it was like 4% of the market. So what that means is you have the same level of economic activity, but half the credit available to service it.
And you can feel that as an investor. I mean, we've been here for 4 years, and literally there has been no debt available until 6-8 months ago. I mean, it just changed.
Yeah.
I can't even say it changed. It's just beginning to change right now.
Yeah, absolutely. And I'm a finance guy, right? So I land here 3 years ago. I look around, I start engaging the real estate community. I look at the deals that I see that people are doing, and I look at these from a credit analyst perspective, and I say these deals have great credit metrics. They're reasonable leverage. The sponsor is building to a great yield on cost, which means that there's a high debt load, even at a high interest rate, the project can support and still have phenomenal debt coverage at the end of the day.
Yep.
This is like a should be a banker's kind of dream market, right? And yet, none of the banks here are really doing much of anything.
No.
Now, to be fair, some of them are getting more active because we've come out of bankruptcy. The economy is really gaining some positive momentum and a really good direction. And so we are starting to see it grow, but the gap from where the market was in the mid-2000s to where it is today is still, it's half of what it was then.
Right.
Not even what it should be, what it was. So there's so much room for that to grow.
And not only that, so again, putting my investor cap on, we 3.5 years into being in Puerto Rico a year and a half ago, go to some of these banks and say, look at this. We've got cash flow, we've got some properties that we value add on, so there's tons and tons of equity. Lend us something. You appraise it, lend us 50%. And I tried, I beat my head against that wall for a year.
Yeah.
Couldn't get it done.
Yeah.
So we still have no debt other than the thing we just closed, right?
Yeah.
That's the only piece of debt I've got on this entire island. We've got a lot of real estate.
Right, which is bonkers, right? As a real estate guy.
Craziness,
It's
right?
anywhere else.
Yeah.
Real estate is an asset you leverage.
They should have been lining up at the door to give us
Yeah,
money, right?
absolutely.
We've got a track record of history, tons of equity, and we don't care how you appraise it or how you value it.
Right.
We're going to take whatever we can get because we're just trying to prove that we can get some liquidity. I think we're really onto it. We're getting all the points out there, but let's talk for just a minute about what's the difference between the person watching the video that wants to be a debt investor versus the person that's a young entrepreneur that wants to be the equity side investor, and why one versus the other.
Sure, yeah, absolutely. So neither one's better or more right. It's all about what kind of investor I am and what my risk profile and reward return profile I'm looking for, right? If I'm investing in the equity, I'm an owner in the project.
Yep.
So if the project is a super home run, goes to the moon, I get a share of that. But on the downside of that, if something bad happens and market tanks, whatever, I can be completely wiped out, right? I'm on the equity side of the capital stack.
Yep.
If I'm on the credit side, I'm investing in a credit vehicle or loan that is secured by the real estate. So I wouldn't call it a downside more than that my upside is capped and that I have a fixed return. If the return on that credit vehicle is 10%, I'm only going to make 10% in the best case scenario where the borrower pays us off on time with interest, right? Which is what we want. But I'm also not taking as much risk because if the market tanks, all those guys on the equity side can get wiped out. I still have a piece of collateral. And if my loan, originator and operators have done a good job of underwriting the asset and structuring a deal in a relatively conservative leverage position, the probability of me losing money at the end of the day as a credit investor, I'm not going to say it's zero, it's going to happen, but it's significantly lower than what it would be on the equity side.
Right. And so myself, I've been an equity investor my whole life.
Yeah.
Only recently have I started to be a debt investor. And here's the reason why. So you get to a point in life where you have something that you don't want to lose, but you don't want your money to sit in the bank, not making you any money. So we're looking to invest in these debt products so that we don't have to be the one who goes out and makes it happen every day, day after day. So don't get me wrong, I'm still an equity investor, but we've got a lot of projects going, and so we've got a little bit of money in the bank that we can afford to invest into this debt business.
Yeah.
And there's a huge need for it here in Puerto Rico right now. So responsibly, we want to take advantage of this arbitrage and get involved with debt. And as I get older and grayer, I'll probably become more of a debt investor than I am even today. So
yeah, or maybe you do both, right? Maybe you want to balance your portfolio.
Yeah.
You have some equity exposure and you have some credit exposure.
that's right.
So it's just it's a way of giving you investment exposure to real estate in a more conservative position or a more conservative structure.
And so if that sounds good to you, and I hope that it does, it certainly sounds good to me, I think it sounds good to Nate, reach out to us. You can contact Nate directly, we'll leave his link below. You can obviously always reach us, you know how to do it, or you can just leave a comment on this YouTube video that you're watching and tell us that you're interested and we'll reach out to you. But if you like the idea of being a debt investor in Puerto Rico with very minimal risk, we'd love to talk to you.
And it might be a good way to get your feet wet on investing deals on the island, right? Say, Puerto Rico's really interesting. I'd like to be a large equity investor, but I'd like to maybe come in a more conservative position on maybe one, two, or a few deals, see the process, see the deal, get to understand the market a little better. And as I gain more confidence, now I can start taking a little more risk and going on the equity side.
I love it. Let's do it, guys. We invite you. Come be our partner. Don't forget to like, comment, smash the subscribe button for us. Thank you, guys. God bless, Nate. It was a pleasure. Thanks a lot.
Hi, everybody. I'm Nate Whigham. My company is Ian Capital, and we are commercial real estate capital advisors. We do debt and equity placement across all commercial property types all over the country and here in Puerto Rico. If you're looking for capital for any kind of commercial real estate project, feel free to reach out. We're happy to look at anything. We try and tell you very quickly if it's something that we feel like we're going to be able to help you with. Our website is encapital.com. My email is nate@encapital.com.